Excellent. Good morning, everybody. Janet's just about to join us. So, this morning, a few facts about bookkeeping, courtesy of Joyce, who's one of the ambassadors. Now, Joyce sent me, actually, 3 sheets of paper, and I've condensed it a little bit. So, we may come back to these over the next few months and do accountancy facts again. Anyway, the first written text in history more than 5,000 years ago reads a total of 29,086 measures of barley were received over the course of 37 months, signed Cushy. A bookkeeper, Cushy, is the earliest known example of a person's name in writing. Before our numbering system was conceived, accountants kept track of animals and grain using clay tokens. Presumably, and this is my view, this is where our modern day abacus comes from. Did you know only 8% of the world's currency is actual physical money? The rest is digital and only exists on computers. A 23-year-old accountant named Walter Deemer accidentally invented bubblegum while testing recipes in 1928. Now, I was fascinated by this next fact. Income tax was a temporary measure on the 9th of January 1799 by the then British Prime Minister William Pitt the Younger, who introduced a temporary measure to help cover the cost of his country's war with Napoleon. A direct tax on citizens' earned wealth, known as income tax. Over 200 years later, that temporary measure remains very much in place and is still a temporary measure. What do you know? St. Matthew the Evangelist is the patron saint of accountants, bookkeepers, tax collectors, stockbrokers and bankers. And I'm sure I shall come back to this one again, National Accounting Day is the 10th of November. Few facts. So this morning, I'm going to go directly to our first speaker, who is David Perkins. Good morning, David. David is a director and licensed insolvency practitioner at Parker Andrews Limited. His relationship with the IAB, he has a professional relationship with Women Who Count, where they assist mutual clients, and he has known Sarah Palmer for years in this regard. Today, he will be talking about the potential pitfalls when faced with possible corporate insolvency and how to mitigate risk. And hopefully, our members will gain useful knowledge which they can utilise to advise any clients facing financial difficulty in the future. Good morning, David. Are you there?
Good morning, I'm here.
Good morning. Over to you then, David.
Thank you very much.
You're welcome.
Good morning, everybody. As has already been said, I'm David Perkins. I'm a licensed IP insolvency practitioner with Parker Andrews. We're a medium-sized firm with 5 license holders plus a support team with several offices up and down the country. What I'm going to give you this morning really is a crash course in things to look out for when a client may be facing insolvency. It's not an exhaustive list, but it probably covers most of the main things to watch out for. I've got some notes, but no slides because I intend to keep it pretty informal. If anybody would like a summary afterwards, though, of what I've said, very happy to oblige. Don't feel you need to scribble away writing things down, of course. So the 4 principal issues I'm going to discuss are shareholder dividends, asset disposals, wrongful trading, and creditor preferences in the run-up to potential insolvency. And I'm very happy, of course, to take questions regarding any of those issues or indeed any insolvency-related queries. Just pop them in the chat, I believe is the normal thing you guys do. So diving straight in, dividends to shareholders. Now, when you're dealing with SMEs, as mainly I do, and I imagine lots of you guys do, directors and shareholders are, of course, often the same people. And I'm not going to teach grandmothers to suck eggs because I'm pretty sure that you'll all be aware of the definition of an unlawful dividend. It is, of course, dividends that are taken when there aren't profits to support said dividends. So I think we all probably know that. And a very simple step that directors can take to protect themselves when they think things might be going wrong is simply to switch to taking salary reasonable salary, of course, rather than dividends. It's less tax efficient, but salary is also much less likely to be subject to repayment in the event of insolvency. Unlawful dividends are pretty much slam dunk money owed back to the company, a bit like a director's loan when a company becomes insolvent. Reasonable salary, directors can't really be criticised for that, and it's very rarely attacked. I've only seen one example of salary being attacked in the last nearly 20 years, and that was when a director switched to salary, but right before the liquidation took 6 months of back salary all at once, right before liquidation. And that wasn't okay, because that will fall under the preference heading that I'll speak about shortly. But generally, if you don't do something silly like that, salary is pretty safe in the run-up to insolvency and much safer than dividends. So, asset disposals. To give you an example, again, it sounds like stating the obvious, but people do these things. You have a company that's potentially facing insolvency, and the director thinks, oh, I know that property that the company has, I'm going to transfer that to my mum for £1. You know, that of course will work. Of course it won't. That's known as a transaction and undervalue in the insolvency legislation. It would be attacked. And I know it's extraordinary, people think they can get away with these things, but it does happen. So with asset disposals, first thing, you've got to ensure an asset disposal is for value. You know, there isn't per se anything wrong with disposing of an asset in the run-up to an insolvency. You know, prudent boards will commonly do that to generate some much needed cash. It's fine, but it needs to be for value. You know, if it's a £250,000 property, it can't be for £1. Or a better example might be, you know, a vehicle that's worth 10 grand. You're not going to be selling it for 500. You've got to get value. It's often, if the asset is significant, it's sensible to get an independent valuation, because then if things do go wrong and creditors question the transaction afterwards, the directors can waive their independent valuation at the creditors and they're fine. As always, documenting things is important. So document the transaction, do some board minutes. You know, this is why we did it. This is what was received. Here's our independent valuation. Because again, it's stuff you can waive at creditors if they complain afterwards, as they often do. And obviously ensure that the company receives the funds, and this can be traced and evidenced through its bank statements. Sounds obvious, again, not always the case. And you know, first thing creditors will ask, well, did the company receive the money? And it's extremely useful if the director or the insolvency practitioner can say, yes, I have the statement, the company had the money. There's been nothing dodgy going on. So the penultimate thing I want to talk about is wrongful trading. We all heard about that during COVID. The government, obviously, with great fanfare, suspended the wrongful trading provisions. Wrongful trading claims actually are quite rare. So despite all the fanfare, it was really probably a bit more pomp and ceremony than practical effect, perhaps, in my very personal opinion. But the definition of wrongful trading simply is where a director knew or ought to have known that insolvent liquidation was inevitable, and they allowed the company to continue trading and it incurred further losses as a result. That's wrongful trading in a nutshell. So a couple of practical examples. If you had a company which was looking like it might be headed for trouble, but there was a reasonable prospect of a lucrative contract around the corner, which would generate loads of lovely money and save the day, you probably wouldn't be wrongful trading, or you possibly wouldn't be wrongful trading. Wrongful trading is a very subjective thing and very entity specific, but there's a reasonable, you know, if I was advising a client, well, we've got this contract around the corner, you know, it's being drafted or it's been signed, you know, whatever the situation is. And our forecasts show that if that contract comes in, we can pay everybody and everybody's going to be fine. You're probably not going to be wrongfully trading at that point. The point where the contract gets yanked or doesn't happen, then there needs to be another review, of course. So that's one example. And it would need to be a reasonable prospect. You can't continue on a wing and a prayer. You know, trying to think of an example of continue with a wing and a prayer, but just because you're dreaming that I don't know, the NHS is going to award you their next big contract if you manufacture radiography machines or something. That's a dream, but there needs to be a reasonable prospect, and a dream won't protect you from potentially being accused of wrongful trading. My other example is if you're, and this is sort of counter to the previous example, you might be awaiting payment of a significant debt, for example, or the director might be awaiting payment of a significant debt. If that debt's going to come in and that's going to mean that everything's rosy in the garden, fine. You're probably not wrongfully trading. If you find out that that debt is not going to come in and that's going to cause a massive problem, then from that point onwards, that might be the point where you knew, or you ought to have known, that insolvent liquidation was inevitable. And that's where you want to be seeking some advice fairly rapidly. So I've bumbled a bit, but hopefully I've given you an idea of the wrongful trading provisions and how they work, albeit it's all very subjective, as I say, and entity specific. And the advice I'd be giving to clients is, if you think that the company might be facing insolvency, you need to monitor the financials and the management information. That's assuming you have some, of course. I'm sure all of your lovely clients do produce lovely management information, or you do it for them, but lots of directors don't, and their bookkeepers and accountants find it impossible to extract the information from them. And in a situation where you might be facing insolvency, it really is vital, because if you're not monitoring your financials and management information, you don't know where the company is financially, and how do you know the point at which you need to seek advice? So that is a common problem, just people not knowing exactly where the company's finances is. Document things, do board minutes, as referred to above, and again, as referred to above, seek early advice and act swiftly when you think you have reached the point of no return, because that's probably going to protect you from allegations of misfeasance and nasty other things. Finally, I just want to talk about creditor preferences, because this is something that quite naturally can trip directors up. And the first thing I want to talk about is we've got this thing in insolvency called the pari passu principle. And the easiest way to explain it is, if you have an entity with 100 grand's worth of debt, and you only have 10 grand's worth of assets, the pari passu principle means that all of the creditors should get 10% of their debt in that situation. Now, the common problem that occurs, and it's a perfectly natural human thing, is directors can often be tempted to pay by age of invoice. I want to pay the oldest invoice first. Perfectly natural. Again, bearing in mind the pari passu principle, that can cause a problem. Or even more commonly, whoever is shouting at them the loudest. And both. It's very tempting, and it seems perfectly logical to many directors, and I have quite a lot of sympathy, quite frankly, but both can trip you up. They need to be bearing in mind the pari passu principle. And the final thing I would say on preferences is don't be tempted, or rather directors shouldn't be tempted, to make extraordinary repayments of amounts owed to the board or other connected parties. Again, you do see it. I gave you an example earlier of a director who took 6 months of back salary. The preference legislation has specific provisions which mean that connected party transactions to directors, relatives, anybody connected to the entity rather than an independent creditor, are even more attackable than unconnected preferences. So all these things that sort of lay people think, are clever to do in the run up to an insolvency. As you're probably guessing, we have the transaction and undervalue provisions, we have preference provisions, we have wrongful trading. Anything dodgy that they might do is going to get caught by something. That is very much how the regime is designed. And things do get reviewed, and ultimately the regime is aimed at dealing with corporate failure fairly, because there are many directors out there who, COVID being an example, it's killed off so many businesses that were previously very successful with very prudent and honest boards of directors. The regime is designed to deal with legitimate failure. but it's also designed to catch people that get up to no good and make sure the creditors get compensated. So I think that's about it from me. Thank you very much for listening. And if you have any questions, I believe you guys pop them in the chat. So
We
please
do
feel
pop
free.
them in the chat. Yeah. At the moment, we haven't got any. We've got an awful lot of people saying good morning. Ian has put, are you able to give a quick summary on the Boris Becker issue? Now, I have to admit, I Googled the Boris Becker issue while you were talking, and it's entirely up to you whether you want to comment on that or not.
I mean, the short answer
I've got no other question at the moment, David, for you.
No, that's fine. I'd probably rather not comment because, to be honest, I don't know an awful lot about it. I mean, I know he's become bankrupt. I think Evelyn Partners have been appointed his trustees, and he's, well, it looks like from the news, allegedly, he has been up to all sorts of naughty things. And I think actually it's a good example to raise because it's probably an example where the provisions that I've been talking about to catch stuff that shouldn't have happened are being very much used by the trustees. So I would probably leave it at that, I think.
Yeah, I don't blame you, David. I would as well.
So,
yeah, we've had a lot of thank you. Sorry, Sarah, you were saying?
I did a question there as well. I just wanted your opinion on actually the marketplace at the moment. So I mean, obviously we're all very aware that it's quite tough out there. Are you seeing a rise in insolvencies? And if so, in any particular industry?
Yes, Sarah. I mean, there's been a rise, I would say, since the beginning of this year. There was a big rise in SME failure. And as we're now in summer and sort of getting towards the end of the year, I am starting to see some slightly bigger corporate failures. And I think, I mean, we can probably all work out what's happening. The SMEs probably simply don't have pots and pots of cash with which to continue and try to survive. Whereas the larger entities tend to be able to weather the storm a bit better and for a bit longer. So it's quite natural, really, I think, that you see SME failure happening first, and then larger stuff starts to happen. And obviously, very publicly this week, we've seen Wilco go down. So I suspect, yeah, the way I would summarize it is I think there's been a bit of a wave of SME failure, and quite possibly we will now sadly see some larger things starting to fail. It's as we all know, it's very difficult times for everybody.
I have a couple of questions coming now as well.
Yeah, I was just going to say, when I've worked with David in the past, obviously with Women in Account as well, I think what I'd like to highlight though is insolvency is not the only option. David's been called in to advise a couple of our clients early and been able to actually not have to go down that route. He's come up with some really good solutions as to how to almost work in a consultancy base with those business. So I think that's a really important point, I think, should be taken away today. And insolvency practice isn't just for when that's it. There's no no hope. If engaged early enough, that potentially it can be a different outcome.
Yes, absolutely. And thank you, Sarah. Yeah, I mean, a very common thing I do get asked to advise on by directors who are worried but aren't, you know, the walls aren't quite at the doors yet, is, you know, we've heard of this wrongful trading thing. Things might go wrong, excuse me, things might be okay, but we want to make damn sure that we're not going to end up getting sued. And I have quite a lot of conversations with boards of directors where I do just give them pointers on what to do, a bit like I've done in this presentation, really, and what not to do. And sometimes they do end up insolvent, and hopefully as a result of that advice, the directors don't get too battered by the thing. And sometimes they survive, like Sarah sort of said, you know, sometimes it can literally be a case of speaking to another business person that can see the woods from the trees and just say, well, you know, so there's been this massive downturn in turnover, but you've got the same amount of staff. Do you still need that many people? And, you know, the sort of pragmatic business advice I'm sure we all give, but people do get bogged down and they can't necessarily see. So yes, that's certainly another part of what I do. Thank you, Sarah.
Yeah.
So the first question is, what's the difference between directors' dividend to partners' pay? I'm assuming that's dividend and salary.
Do we mean dividends and salary, or do we mean, are we talking partnership, sole trader
Because
income.
partnership's not limited, is it? So
No, I mean, whoever's asked the question, do sort of interject in the chat.
Dylan, if you put in the chat and come back to us. Yeah. We'll see what happens with that, David. Is the revenue a preferential creditor?
Yes. They were, and then they weren't, and now they are again. When I started in insolvency back in the early 2000s, they were preferential. I cannot remember, because it's getting on for 20 years ago now, what they were preferential for, but I think it was rather more than they are preferential for these days. And then we went for, nearly 15, 20 years where they weren't preferential at all. And it's now been brought back within the last few years. They are preferential again, but it's two important things to note. They are what's known as a secondary preferential creditor, which means that the employees, in respect of the employees' preferential entitlements, come first before the revenue get paid. I won't go into employee entitlements as part of this, because that's a whole other sort of area. I can do if somebody wants me to, but I won't just now, because that's another area that's a bit complex. So the employees get paid first for their preferential element, and then HMRC get their preferential element. Secondary preferential creditors rather than just preferential creditors. And it's an important distinction, because before HMRC actually ranked alongside the employees, whereas they're behind them now for certain things. And HMRC, the easiest way to explain the aspects for which HMRC preferential is to describe it as taxes that companies collect on behalf of HMRC. So they are not preferential for corporation tax, for example. That's a direct HMRC liability of the company. But they are preferential for things like PAYE, VAT. You're all familiar. The stuff that basically we all collect, or rather the companies collect on behalf of HMRC from their employees and from customers and what have you. Does that make sense? If I explain that clearly enough?
Does, yeah. Perfect sense. How does it work if a company wants to liquidate and wants to trade under the same name as a limited? I'm assuming you have to change your name as a limited, don't you?
Not necessarily. What we're talking about is the prohibited name provisions. And basically, the starting point is, if a company goes into insolvent liquidation, the directors are not allowed for a period of 5 years to reuse the company name, the company trading name, any name that sounds like either of those names, anything that sounds remote, that the company's remotely been known by. So people, if somebody's trading as ABC Limited, they'll often say to me, oh, well, I'll just set up ABC UK Limited. You won't, because it will still get caught. And the penalties are quite severe, because if directors set up a company using a similar name without taking certain steps, which I'll whiz through in a moment, it's a criminal offence. So you can actually get fined or go to prison. And possibly more importantly, if you are trading a company using a prohibited name and that company fails, you completely lose the protection of limited liability. So the directors would become personally liable for all of the company's debts for the period that it's been trading under a prohibited name. So it's a very important question. There are ways around it, perfectly legitimate ways around it, because fundamentally it is designed to stop people duping creditors into providing credit facilities for what they think is an established entity, which isn't. And the ways around it are, you can go to court, you can apply to court, and if the judge is satisfied that it's reasonable failure, you set up a new company for legitimate entrepreneurial purposes, they will usually say you can reuse the name. Another route is where you buy the business and the assets from the liquidator, and you give notice to all of the existing creditors of the company, and you put a notice in the London Gazette. So you set up the new company, you buy its assets to market value, and you tell the world essentially that that's what you're doing. There's an exemption there. And there's another exemption for established entities. If a director has two companies, ABC Limited and ABC UK Limited, and ABC UK Limited is fine and has been trading for about 10 years, the failure of ABC Limited will not mean that that company needs to change its name. There's an exemption there for companies that have traded for a long, long time before liquidation. I'm going to add a caveat there. The Section 216, the prohibited name provision that I've just given a crash course on, do not rely on any of that as advice, because it's very entity specific. And I always say to clients of mine, you must get independent legal advice if this is going to be an issue, because there's plenty to trip up. And I have by no means covered everything in that conversation. So, you know, don't repeat that to any clients. They need to get it from a lawyer based on their specific circumstances.
Thank you. Tanya said, could you please repeat number 4, something principle?
The pari passu principle. That's where all creditors have to be treated fairly and equally.
And then she's asked, any advice for companies with clients facing insolvency, any steps to take to ensure a creditor preference? But I'm assuming that's going to be too lengthy for this coffee morning.
I can probably crash course it. If your client is a perfectly innocent creditor of that company and is receiving payment of its debts in the reasonable course of business, you're not likely to have a problem. Let's think about this. Where problems would arise if, for example, a winding up petition has been presented against that company, i.e. an application to court for the company to be forced into liquidation. That is publicly advertised. If you think that an entity may be insolvent that owes a client money, it's worth doing a search of the London Gazette to see if there's a winding up petition outstanding. The reason being that where a winding up petition is outstanding, any transactions that dispose of the company's assets, pay creditors, what have you, while there is an outstanding winding up petition, are attackable. So that's something to watch out for. If the directors, you know, paid a client 10 grand after a winding up petition has been presented, that could be a problem. Again, more likely to be a problem for the director than the creditor if the creditor's acted in good faith, etc., etc. But it could be an issue. So it's always worth searching for a winding up petition. But in general, these provisions are aimed at catching directors that are up to no good. They're not aimed at catching perfectly innocent creditors who have just had their debt paid. So I would be less concerned about that in general, probably.
Right, thank you very much. And then we've got a lot of love coming in. So yeah, thank you very much, David. Very helpful.
Okay, thanks a lot, guys.
I'm going to move very swiftly on now to Catriona Still, who is the DCPCU Head of Fraud Prevention and Trading. Her relationship with the IAB, she's previously delivered webinars for customers to try and raise awareness and prevent them from becoming a victim of fraud. Today, she will be talking about Fraud Uncovered, the psychology of fraud and the tactics the criminals are using to manipulate their victims, the red flags to watch out for, and how to prevent yourself from being a victim, both in personal and work life. And she will, of course, talk through some of the new and emerging MOs the criminals are using. Are you there? You are. Excellent. Hopefully, our members will learn how to spot the signs, the red flags. You're never going to know all of the scams, as there's a different flavour every week. But if she can teach us what to look out for, it shouldn't matter what type of scam it is, and we should know how to stop, challenge, and protect. Good morning, Catriona.
Thanks, Caroline. That was a
nice
intro. Just checking you can hear me okay.
Yes, we can.
Good.
And you want to share your screen, don't you?
Yes, please. Let me just get that sorted. Thank you.
Yep, that's my screen.
Fab. So let me just check I can share my screen. Where's the little button gone? Right, hang on. Sorry, guys. Give me just a sec.
Stop share.
Yeah, it's coming up host disabled participant screen.
Yeah, no, I'm going to sort that now. I pressed the wrong button. Sorry.
Let's try again.
Sorry, Kat.
That's all right. Right, let's just check you can see this. And let's make it bigger. So you can see
much nicer than my screen.
There we go. Well, good morning and thanks again, Caroline, for the introduction, and to the IAB for inviting me along again. Delighted to be here to give you a little bit of what we're seeing. As Caroline said, talk you through some of the types of fraud that we're seeing a lot at the moment, and also how you can look to prevent yourself and your business becoming a victim of fraud. So just a really brief intro. I've been working over at the dedicated card and payment crime unit for around about 8 or 9 years now. Prior to that, I used to work with one of your members, Kerry Whale, and Women Who Count. So that's how I was introduced through the IAB a little while ago. So we used to work back over at Nationwide Building Society, where I worked in the Special Investigations Department, working in the fraud team. And since then, like I said, been working over in the dedicated card and payment crime unit. So I'll give you a little bit of an intro. Who are the dedicated card and payment crime unit? I hear you shout. To be quite frank, not many people have heard of us, even police units around the country. So last week I was up in Manchester and Greater Manchester Police. People I was speaking to had never heard of the police unit, the dedicated card and payment crime unit. So it's been going 21 years, but it is a small unit, but it packs a pretty hefty punch. So on average, it's saving the banks around about £30 million a year. The banks are the ones that pay for it. So it's a bank-sponsored police unit, which is a really weird thought. But the reason that was set up all those years ago was quite frankly because the banks were struggling to get cases taken on by law enforcement. And to be quite frank, that hasn't changed significantly. As a police unit, we are small. So we've got 30 warranted police officers, both from the Metropolitan Police and the City of London Police. But we do have national remit. So that means that we are responsible for the fraud types that I'll mention in a moment, right across the whole of the United Kingdom. So for a small team, we've got a huge area to cover. Now, our main remit is to go after organised criminal gangs. So we don't take one-off referrals from, for example, members of the public. We would get our cases referred to us from the banking industry themselves. So they pull intelligence together, they discuss intelligence weekly, twice a week on the main threats that they're seeing. And they share that freely, which is really useful. I used to head up the intel unit over there, and obviously I came from the banking industry, so I totally get how it all works. And we realised that actually working together collaboratively, funnily enough, can be a little bit more successful. It's a bit like I talk about the jigsaw piece puzzles. And if we've got a 1,000-piece jigsaw, but we've only got 5 pieces of that jigsaw because only 5 different people have reported, we're not going to have enough of a picture to go after the criminal gangs. So it's really important to us that our members report and that customers or consumers that are victims of crime also do report it. I'm sure this question might come up, or a comment might come into to ask, you know, what happens with the intelligence and why bother reporting it because the police do nothing. The truth of the matter is it is the largest crime type in the whole of the UK. We struggle with resources. We, as I said, are a dedicated police unit, but there's only 30 of us covering a very wide area. So what we do as a police unit, we go after organised criminal gangs responsible for staff insiders. So they might be recruiting people within organisations in order to either steal customer information or personal identifiable information that can then be used by criminal gangs, or of course in order to try and transfer funds. So we go after the organised criminal gangs that are responsible for staff insiders. We also look at organised criminal gangs responsible for card not present fraud. That is where people are using stolen card data. So data is sold online day in, day out. And I've got a demonstration of that in a little while, which I'll show you. And then the other thing that we look at, which is authorized push payment fraud. Now, APP, we know it. Authorized push payment basically means the criminal gets you to do the transaction. And the reason for that is that the banking industry are getting pretty hot on how to stop the fraud that they're seeing, because they will know when a criminal is logging in from a different device, for example. If the criminal gets the victim to process the transaction, of course, it will show as the normal IP address and the normal device that the customer uses. So it makes it a lot harder for the banking industry to try and stop it. So just briefly, they are the 3 types that we investigate as a organised criminal gang group that go after those gangs. And I mentioned that we're City of London, UK Finance, Metropolitan Police working together. Now, the side of UK Finance, they deal with legislation. So that is where we need things changed with government, and they deal with large scale projects. So another example of that is something called banking protocol. Now, if you were to go into your local branch of your bank, if it's still open, and do a withdrawal or request a large withdrawal, you will get questioned beyond belief to check that you are not being scammed. A lot of the scams that we are seeing at the moment are getting people, grooming people online, and we'll talk about this in a moment, into going into the branch and doing the withdrawal, and they will stay on the phone the whole time. So they are being groomed through the questions that the bank staff are asking you, which makes it very difficult for the bank staff to try and prevent. Okay, I think that's enough about the police unit that we work in. The journey that we've been on over the last, I'm going to say 15 years, has been a really interesting one when it comes to technology. Technology has changed beyond belief. You might remember chip and pin. That was brought in by UK Finance a long, long time ago to try and prevent card cloning. I'm sure you may have heard of that term, card cloning, card skimming. That is where they put devices on ATMs or unmanned payment terminals like car parking machines, things like that, in order to copy the details on the back of your card. Now, we can pretty much stop that now, which is great in this country when we introduce the chip. However, it moves it to other countries that don't have chip and pin in place. So that is one example of a really, I was going to say, an old type of fraud that we do still see happening from time to time. But the banks in this country have methods in place to try and prevent that type of fraud. So then we've gone down this journey of different types of technology being brought in. And it's really interesting when it comes to contactless cards, because so many people have a fear of contactless payments, and they may even buy the little wallets. Some people call them RFID wallets, Faraday wallets, that type of thing, to try and prevent that communication with your card. What I can tell you is, yes, criminals can try and scan your card, but they can't then do anything with the data once they've got it. So as far as I'm concerned, those wallets are pointless. Don't waste your money on the wallets. They're not going to help prevent fraud. They can't use it. So there's no point in buying that technology. What it does mean then is that the criminals are now targeting you guys directly. Now, the reason for that, as I mentioned a few minutes ago, the banks are putting in quite a lot of measures to try and stop fraud up front. So last year they stopped £1.2 billion worth of fraud, and it works out at about 61.7 pence in every pound that the banks identify, block and stop. So they're doing a pretty good job. To be frank, there's always more that can be done, but quite often it can be outside of our remit and outside of our control. So part of what UK Finance are doing is trying to work with government to say, look, this isn't just a banking problem. There are social media companies that are allowing fake adverts, so there's a huge amount of work that needs to be done in other areas, but what we need to be doing is working on that together. So getting back to that journey and the path that we've been following over the last 15 years, the fraudsters are targeting you. They're targeting you as a business and they're targeting you as a consumer. Both sides of the coin in slightly different ways. Now, we've got a few different MOs. MOs and modus operandi, that is what we call the different methods that the criminals use to try and target you. I'll go through some of those examples in a little while. What was interesting when we come to this journey was what happened during COVID. That really changed the landscape for us as a fraud investigation police unit, but also for how the criminals started targeting us. So you may, and I'll be amazed if you guys didn't receive a text message at some stage, which was either from DPD, Royal Mail, claiming that you've got a parcel that needed collecting, or that NHS vaccines. We were seeing a large amount of that during COVID times. We saw pet fraud. Pet fraud was huge during COVID. So that is where people were working from home a lot more and wanting to get out for a few more walks. And so we saw the sales in pets going up significantly. But what comes with that was the criminals that identified opportunities in order to target people for the sale of pets. So they would put up a fake advert, with a lovely picture of a lovely puppy or 10 and say that you need to give an upfront fee, but of course the puppy's not going to be available for another 8 to 10 weeks. That then obviously they got an upfront advanced fee fraud, we call it. So they get an advance payment. Of course, no puppy ever existed. And people were feeling very disappointed when their puppies didn't arrive, but you know what I mean? They weren't delivered, arranged to be collected 10 weeks later. So the landscape changed a lot during COVID. And what we had to do as a result, as a police unit, we became pretty much the COVID police. it was pretty horrible times, if I'm honest. Some of the officers were having to go around to people's houses to confirm deceased residents because there weren't enough ambulance staff or medical staff to do that. But when it came to the fraud landscape, we were inundated with we call them snishing, but the text message scanners. So we became, like I said, the text message police. It was interesting times. If I were to say to you, what was the youngest person we arrested for text message fraud during COVID? Can anybody give me a guess?
I'm going to guess about 12.
Bang on, Caroline. Yeah, 12.
I got one this morning from Every.
Oh, did you? Telling you that you got
they
a
need
parcel
£3. Yeah.
Redirecting.
Yeah.
What they'll do there is they'll take the £3, first of all. So that's a £3. If you can imagine 1,000 people doing that, they're making a fair bit of money. What they'll then do is phone you and socially engineer you over the phone. But I'll come to that in a little while. So we've definitely seen the landscape change significantly when it's come to digital habits, being online a lot more. And I'm an online user. I've got no fear of going online. I'm maybe, if anything, maybe I'm one of the complacent few that thinks, do you know what? I know if I have my money stolen fraudulently, I will get my money back. The challenge you might have is if you are transferring money to a fraudster and the banks are providing you warnings and you go beyond those warnings, that can become a little bit more challenging. But the landscape is changing in that space too, where the regulator has come in and said banks must refund. I've got some very interesting views on that one. I won't get into today. I think it will breed a lot more complacency. It's almost like an insurance, but at the same time, I see the impact it has on victims, and it is significant. It doesn't have to be a large amount for a business, might be a small amount for an individual, but it might have the biggest impact on their mental health. So yeah, I'm not going to go on to that. I won't get into that for the moment. So one of the things I wanted to talk about, the psychology of fraud. This is a really interesting space and something that we are looking at in a great deal of interest. Like I said, I've been in fraud for 20 years, but looking at it slightly differently from a victimology perspective and criminology perspective, psychology perspective. It's looking at our habits and the way that we interact. Now, when it comes to fraud, if I were to say the word fraud to you, what image comes to mind? Do you even have an image that comes to mind? It might be a guy in a hoodie, binary code, that type of thing on a screen, a laptop. That's very much the only image that you can ever really picture when it comes to cyber or fraud. And this is part of the problem. When it comes to fraud, we don't have an emotional tie with it. And this brings an awful lot of problems when it comes to the education sphere, but I'll tell you why. The reason for that is if I were to give you an example of terrorism, we can probably all conjure up an image. We might change our behaviours as a result. Certainly when it was 7/7, I was working in London a lot more than I do now. I used to travel into Liverpool Street Station. And if I'm honest with you, I became a little bit nervous in doing so. So I'd get off the station early at Bethnal Green and then walk the 20 minutes or half an hour down to the office. I didn't want to be going into really busy places. I was worried about imminent attacks. And I think the emotion that a terrorism attack can be huge. But yet when it comes to fraud, we don't have that image to associate to it. We don't have that emotion. And you might hear cases and you might have case studies that people will tell you about, don't fall for this and don't fall for that. The problem is twofold with this. One is about the language that's used. Don't be fooled, don't fall for this, is putting the onus on the victim or the potential victim. I have a major problem with that because I believe anybody, any one of us on this call today, including myself, can be the victim of a scam or a fraud. I don't really like the word scam, if I'm honest with you. It's a fraud. Criminals are trying to defraud you. They're trying to steal your money. It's a criminal act. I think scam, the word scam, kind of downplays it a little bit and makes it feel like it's a bit of a joke. This is not a joke. Like I said, the impact it has on businesses and individuals is significant. So one of my issues is about the language that we use, saying, how did you fall for that? Well, genuinely, anybody can be groomed, anybody can be manipulated if caught at the wrong time. So if I'm going to give you an example of this, there's a lad that I knew, my husband works for a football club, and it was a Champions League game. And he got a phone call claiming to be from his bank, just as they were he was a kit man for the football kit, and They were just trying to get the kit sorted for this Champions League game, and he got a phone call claiming to be from his bank saying, we need you to confirm that these transactions aren't yours. So he had the codes popping up on his phone, and he was like, yeah, that's definitely not me. So they were telling him in order to get the refund, he needed to approve them. Now, of course, in approving them, that approved the transaction that had been set up to come through on his phone. He lost £15,000. He was 21. This doesn't happen just to a specific demographic. People seem to think this won't impact them. It only happens to a specific demographic. Well, I'm here to tell you that is not the case. It happens. A lot of the text message scams, frauds, let's call them frauds, are responded to by the younger generation between the ages of 17 and 34. This is not just something that is affecting the older demographic. It is affecting us all, but in slightly different ways. Now, when it comes to that psychological part, when it comes to risk, it's very difficult to associate risk and to have a belief. There's something called an availability heuristic. Now, what that means is that something comes to mind quickly and you know that that is going to be something that could affect you. So that availability heuristic, when it comes to fraud, we are struggling to be able to get through to people that this is something that can affect them because they just don't believe that they can be defrauded, can be scammed. And with the technology changing, I think what's happened is that landscape has changed so significantly, but yet our understanding of the technology isn't quite where it should be, perhaps. So I'm going to give you an example here of cash and card. Would you say that it was easier to pay £10 on your contactless card? No, I'm going to do it the other way around. £10 in cash or £40 contactless? I actually think, Caroline, you're going to say something, go for it.
Well, I was going to say contactless because I never ever carry cash anymore.
I think that's probably what most people would say. Our habits have changed so significantly that we've become a tapping nation now. There's nothing wrong with that. That's what I do. My phone, my watch, my card. It's so easy to do, but it means that we're losing a bit of reality when it comes to what we're spending and what we're spending it on. It's very quick and it's very simple. And one of the things that we're looking at as an industry is how, because we've made payments so fast now, how we can slow that down when it comes to fraud and scams. So I mentioned the banking protocol. That's where if you go into a branch to do a cash withdrawal, they will question you. And in the 6 years that's been running now, that's saved over £620 million worth of money from fraudsters' pockets, from them getting hold of that money. So these type of things we've got to challenge, but we've got to challenge them in the right way. Where does the data come from in the first place? I think most of you will probably be aware of this, so I apologise if I've been touching on stuff that you've heard of before. We have phishing. That is your emails. It's spelled Phishing. We have vishing, voice phishing. Now, this is one of the biggest ones that we're seeing at the moment. This is where they will phone you claiming to be from your bank or from law enforcement. I'm going to give you a couple of examples here. Now, this is really important because we are hearing about this day in, day out with organisations at the moment. They may get a call into their finance department claiming to be Catriona still from Santander. So they'll know which bank you bank with. And they will call up and say, hi, it's Kat calling from Santander. We're concerned about a couple of the payments that have gone through your account, and we need you to authorise or to check those out for us. So the same type of scam that affected the kit man at the football club is affecting businesses. I spoke to a business last week. How much was the invoice for? I think it was about £300,000, a large amount of money. And the bank, so the fraudster had phoned claiming to be from the bank and wanted them, they said that the payment hadn't gone through and they wanted them to reauthorize the payment. Now, what that would have done is made a second payment. So being contacted by your bank, be highly, highly suspicious of that. If they tell you to phone back straight away on the number on the back of your card, be aware that they are keeping the phone line open. Okay, so what I would advise you to do is to say that you'll call back, not on a number they've given you, but on a number that you know exists for your bank or your supplier, whoever it is that is making that call to you asking for the payment to be re-put through. I can't think what the word is for that. Resubmitted, let's go for that. Be highly, highly suspicious of that. I'd ask you to put the phone down and then call back from a different landline if you can, or a mobile phone or something like that. The criminals, UK Finance actually worked with the telcos, the telephone companies, in order to reduce that time down, but it still keeps it open for around about, depending on which company you use, up to 5 seconds. So another method that the criminals are using, and this is awful, I was just reading some actually while David was talking. I was just reading some police reports, try and give you some up-to-date ones. And these are just ones that have come through in the last couple of days. It just makes me feel really ill, but this happens day in, day out. So a elderly couple, one was 84, one was 92, were called claiming to be somebody from the fraud squad. Now, I'm going to use my name as an example. Hi, it's Catriona Still calling from the fraud squad. We really need to speak to you about attempts on your account. We've got somebody in custody. We believe that they work within your bank and that they are handing out counterfeit notes. But before we go any further, you don't know who I am. So what I need you to do is to call back, phone 999 on your phone immediately, don't delay, and ask to be put through to the police. Check out who I am before you give any information out to me. So it kind of makes the victim feel like they are doing their due diligence. So they will be calling back on 999. The call center environment will sound absolutely identical. So it might be, if I was a female officer calling, then it might be a male answering the phone, and they might say, hi, you've got through to the emergency services. Which service do you require today? Police, ambulance, or fire? They will say police. They'll ask for the warrant badge number that I would have given you, my epaulette number, and that will confirm they think that that is an officer phoning them, when in fact it's not. This is happening day in, day out. What they are asking people to then do is to be involved in a police investigation, not to speak to family and friends. So the fraudsters will always try to isolate you from speaking to anybody else about it. And that is why they might keep you on the phone for hours. Now, I'm conscious of time because I've got a fair few bits to get through yet.
Yeah, I was just about to say, Kat, because we're at 5 to 12 now.
Yeah, I've got through
I have a couple of questions
quite
as
a lot
well.
of this anyway. So I am going to go through this as quickly as I possibly can. If you get that phone call, my first thing to you is to put the phone down. We spoke about stop, challenge and protect. Caroline, you said that at the beginning in my blurb. It's about stopping what you're being asked to do and thinking, take a few minutes just to think about what you're being asked to do. It could well be a fraudster. Hanging up and phoning back. So that's where the challenge comes in. Now, if you then believe you've been a victim of fraud, it's about then protecting yourself. So first port of call would be to contact your bank. Second port of call would be to report it to Action Fraud. Absolutely imperative, like I said, when it comes to the jigsaw piece puzzles, to make sure that we are getting all those pieces of the jigsaw. Now, I'm going to go through, I've spoken a little bit about the data. I just want to show you what it looks like. This is a criminal site that sells data. You will see there down the bottom, $18.60 per data field. This is what data looks like on a criminal site. It is very much a marketplace, okay? So these sites exist, we take them down regularly and they pop up elsewhere. But that is what the data will look like. Now, on this case at the top here, this guy actually was refunding people if the card had been blocked. So he's got 1.2 thousand, you might see a little star at the top, 1.2 thousand positive reviews. So I just want you to understand the scale of this. It is a marketplace. When the data comes through, they might have everything. This would be called a FULZ, F-U-L-L-Z, where they've got email, mother's maiden name, password, etc. That is what the data looks like to you. This is a SIM farm. This is, I mentioned the guy earlier, the 12-year-old that was sending out text messages. This is what the criminals use in order to get those text messages through to you as quickly as possible. Now, if I can get you to take away one thing from today, it is this. These are the red flags to watch out for: context, authority, urgency, scarcity, and emotion. The cause. Look at the C-A-U-S-E. Remember cause. They will use the context, the here and now, the cost of living crisis, things like that, in order to get things, in order to put you into that fight or flight, that panic mode that we spoke about earlier. They'll use authority, HMRC, the police, the bank. your mobile provider, etc. The urgency, you've got to act now. Scarcity, a lot more so when it comes to investment scams. Don't lose out on the opportunity. Once they've got your emotion, very difficult to get out of that fight or flight mode. I won't concentrate on this one because that's about the money going out, and I don't think that's as relevant as it would be to go through some of those questions. I'm really conscious, Caroline, that I could have spoken for another half an hour. But
we might have to have you back, Kat.
Yeah, sure, anytime. What questions have you got that I could answer, Caroline? And I'll do my best.
Jennifer says, so great to see you on here. I've previously used LastPass and I'm now unsure if it's still safe to use.
The what one?
Password manager software.
Oh, yes, great. They are fantastic. So I have got no fear whatsoever. My cyber guys would tell you exactly the same thing. Password managers are probably the easiest way to use it. And it's better to do that than to have the same password along a load of different accounts.
Yeah, and then I've got people saying the bank said if they phone you to call in, someone else would suggest a call back or that you're going to be advised by your relative. I have a friend whose mother and they left her alone once she said that her son-in-law was a police officer, even though he wasn't.
Love it. Anything like that that can disrupt them, the more the better.
Yeah.
Make
and
it
then a lot of thank yous, very, very informative, very eye-opening. So,
good.
Yeah.
Oh, that's great to hear. What I will do is I'll put in the chat if I can work out how to. I can't see where it's gone now. I need to stop sharing my screen, don't I? Then what I'll put in the chat is I've got a little useful site that you can go to. That is on the UK Finance site. That will tell you about all the fraud, all the scams, just gives you a little bit more knowledge. I think because the scams change or the frauds change so much, as long as you can remember that cause and not be pushed into or feel emotive, try and stay calm. That is the best option. Hang up and call back from a different phone line.
Yeah, I'm just going to read that link out because anybody watching on video can't.
Oh no, so if you look up UK Finance Annual Fraud Report 2023, if you just did a Google on that, you would find it.
All right, excellent. Thank you very much. And yeah, I'm really sorry to cut you short, but yeah, we're at 12 o'clock.
We pretty much got through all the content.
Yeah, thank you.
Thank you, Kat. You're going to be back by popular demand. I can feel it. So thank you ever so much. We are, Karen, just before you close as well, I just wanted to say, Sujay, we have a new member of staff. Sujay, if you can wave. So Sujay will be helping. He's come on board, well, to help with lots of ideas, but promotes at the AML Complete Help Desk as well. So just a shout out to Sujay. So welcome. Thank you, everyone. Go on, Caroline, I'll let you close.
Have you any HMRC updates, Sarah?
Well, only very, all I was just going to touch
quickly,
was,
please.
very quickly, I was just going to say, I've just been involved in several consultations. One was MTD, and the other one was regulating the industry. Kerry Whale and myself spent a day with HMRC discussing MTD. It was a really good workshop environment, actually. And I have to say, HMRC definitely seemed to have a sea change in how they want to operate. So they're very keen to really engage, understand what the problems are at grassroots level. So that was a really, really important day. They've taken away a lot of our thinking. So we should see what happens next. In terms of regulating the industry, that's going to be, that's an ongoing and still at quite a high level. I think that will only be introduced if whichever government has more of a political appetite to deal with that, I think. So, but anyway, that was it from me. Very quickly.
Brilliant. Thank you very much. And just again, thank you
Janet's going to say something too. Are you done it?
Yeah, just to let you know that, just a reminder that Sarah and Tom are running the New York Marathon in November. Sarah's training is probably not going quite as well as Tom's. Tom's smashing it and Sarah's struggling a little bit. Yeah, she's aching this morning from her run. But just to let you know, the Just Giving page is up, and it's for our two charities, the Bavaria, I can never get this right, Bavama or something like that in India, which is like orphan kids, and the school that runs qualifications there, and the Skype Charitable Trust, which is a new charity in Leeds, again to help underprivileged children to either have internet access or tablets for school. So that's what we're raising the money for. The So please give. We'll keep you updated on the training, and Samantha will keep you posted about what's going on. Of that. So wish you luck and like lots of encouragement for Sarah.
Thank you.
Yeah. Good luck with that.
Yeah.
Yeah.
Caroline might be sobbing for me.
Well, if I can help, I'm
Yeah,
an
that'd be
email
good.
or a phone call away. But yeah,
Oh, good.
good luck.
Brilliant. Thank you, everybody. Good
And,
morning.
Thank you. Take care, everybody. Bye.
Our next coffee morning is the 20th of September at 11.
Thank you.
See you all then. Bye.
See you. Bye.
Bye.